A letter of credit, LC, unlocking international trade success. In the world of international trade and commerce, trust and security are paramount. Businesses that engage in cross-border transactions often face the challenge of ensuring payment for goods and services, while also providing assurance to their partners. This is where a letter of credit, LC, comes into play as a crucial financial instrument. What is a letter of credit, LC? A letter of credit, commonly referred to as LC, is a written commitment issued by a bank on behalf of a buyer guaranteeing payment to the seller for the provided goods or services. It serves as a risk mitigation tool that acts as a bridge of trust between the two parties involved in an international trade transaction. An LC is a legally binding document that outlines the terms and conditions for the payment, the document presentation, and the timeline within which the payment will be made. How does a letter of credit work? The LC process involves multiple steps and parties. Here's a simplified explanation of how it works. Agreement. The buyer and the seller agree to use an LC as the method of payment in their trade transaction. Issuance. The buyer's bank issues the LC in favor of the seller, confirming the buyer's commitment to pay for the goods or services. Document presentation. The seller prepares the required documents, such as invoices, shipping documents, and certificates, as specified in the LC terms. Presentation to the bank. The seller submits the documents to their bank, which reviews them to ensure they comply with the LC terms. Payment. If the documents are in order, the seller's bank forwards them to the buyer's bank, which then releases the payment to the seller. Delivery of goods. The buyer receives the documents and takes possession of the goods. Why use a letter of credit? Risk mitigation. An LC minimizes risks for both the buyer and seller. The buyer is assured that they will receive the goods as per the agreed terms, while the seller is guaranteed payment upon meeting the document requirements. International trade. LC are particularly crucial in international trade, where parties may be in different countries and face varying legal and regulatory frameworks. Trust and credibility. Using an LC demonstrates a commitment to fair and secure trade, enhancing the trust between parties involved. Payment assurance. Sellers can be confident that they will receive payment, reducing the risk of non-payment or delays. Compliance with regulations. LC help businesses comply with import and export regulations, as they often require specific documentation to prove the origin and quality of goods. Flexible financing. LC can be tailored to include financing options, allowing buyers to make payment at a later date or in installments. Reduced disputes. The clear terms of an LC reduce the chances of disputes arising between the buyer and seller. Types of letters of credit. There are various types of LC tailored to different trade scenarios. Commercial LC, used for the sale of goods between a buyer and seller. Standby LC, acts as a financial backup, typically used when the buyer fails to make payment. Revocable and irrevocable LC. Irrevocable LC cannot be changed without the consent of all parties, providing greater security. Confirmed and unconfirmed LC. A confirmed LC includes an additional guarantee from a second bank, offering more security to the seller. In conclusion, a letter of credit is a powerful tool in the world of international trade, providing security, trust, and reliability to both buyers and sellers. By mitigating risks and establishing clear payment terms, LC facilitate the flow of goods and services across borders. Understanding the different types of LC and their application is essential for businesses engaging in international trade, ensuring smooth and secure transactions that drive global commerce forward.